Hey guys, welcome on board. Welcome everybody. Let's get cracking. All right. So sorry guys, it's a late one today that we're coming on, but let's have a look at the markets anyway and let's see what's going on. So USD CHF. Okay, price action is pushing towards the long side. USD CHF is returning to the area that I'm looking for. So if you're looking for a re-entry trade, we have one coming up very soon. And I'm going to use the 5-minute for this one. Now we had a liquidity gap at the beginning of the new Asian session here. And I'm expecting to see something soon about the price going on here. So I want to see what the price is going to do. Again, the entry for this, or the entry that I'm looking for, I'll show you guys what I'm looking at, is right back up here. I believe the price is going to give us an entry between this range here of 200, 0.99200 to 27, right up here, between this range, or 94. This is where I'm expecting an entry from very soon. The price is approaching there, and I expect the price to get into this zone soon. Anywhere from here, and then after we should get a short. So major opportunity on USD coming up right now. If you want an entry, all right, entry range is between these 2 points, and stop loss the easiest stop loss to go for would be either above this high where the liquidity void started from, or you can, if you want to, put the stop loss above here, depending on what you want to do. So stop loss range is either between here. Now the risk to reward potentially is you could have from here, and the targets, guys, if you want the target before I continue, we're looking for a target right here at this low right here, 0.89645. Now Jackson Hole is starting today. All right, so this is what I'm looking for right now. I'm expecting some serious things to take place. I'm watching out to see what the price is going to do. Okay, this is where we are with Jackson Hole. So I want to explain to you guys in a moment what Jackson Hole even means. Well, let's just look at the US dollar pairs to see what's going on. All right, so NZD, from the shout that I gave you guys yesterday, you can see what the price has done. It's returned to the supply order block and has made its way further up. All right, and as I told you guys, there's nothing really to the left holding this price from even getting back up to where we discussed yesterday. Watch yesterday's session if you're not too sure. Now let's look at USD CAD. USD CAD is staying within a range. So I'm going to take off the lines here. I do believe we're going to get a long on USD CAD, possibly, depending on how the price action and what we see moving forward. Now, the price has dished out a lot of pips long and short, but the most important thing is that we have market structure break even down to the H1 right here. We have a very strong body close beneath this swing here, which is a very important swing, because here is where we had, I'm going to mark this out. Here is where we had market inefficiency. I want to put here specifically is order book inefficiency. Okay. And this is type 1. So within the Wealth Group Academy, this is type 1 order book inefficiency, this low right here. And this is something that I'm going to put this here. This is something that I'm looking at, this low right here. This is the order book inefficiency type 1, but we have market structure break. So now that we have a break of market structure, I'm expecting the price to re-clarify the order blocks, or the price direction and the order blocks towards the short side. Now here's the market structure break. And now from this, if I go to where we are right here, here is the A swing. Okay. And then here is B. All right. And the expectation is that we want the price to give us a C swing back up to this. Well, hopefully the price may even come back to the supply zone that it created for this reversal that we're seeing. Now, I talked about USD CAD here. This is the algorithmic level for it, 1.29170, if you want to keep that on your charts. Well, this is where we are now. I believe with the Jackson Hole, there is a chance that the price can push long on USD CAD. Remember, guys, USD CAD doesn't have the same pair correlation as other US dollar pairs, okay? The US and the Canadian dollar have a very special type of relationship, a consumer to commodity relationship that is not only dependent on just normal factors of correlation strength, but there's also aspects of commodities in there that are important for what we're looking at with the price action. So looking at what we have here, I expect the price to pull up to at least, now on the weekly time frame, here's the weekly order block that I've been speaking about. And you can see that we've had the wick fill here. The price has filled the wick. And this is a major, major opportunity here for us to see the price give us a very strong short. There are lots of inefficiencies on the downside. And again, targets, guys, for this trade, if the price does what I expect it to do, especially if the US, now with the Jackson Hole Summit, if they decide that they're not going to talk about, or they're not going to do the tapering, okay, it's going to be very interesting to see what happens. Now we're going to look at what happens here. We'll look at the economic structure of the dollar where we are right now, so that we can check out what's going to happen when it comes to Jackson Hole. Okay. Now Jackson Hole, the meeting again is a very important one, and I want you guys to keep yourself very much so ready for whatever is about to happen. Okay. So I'm going to show you guys about what exactly was going to happen in a moment, but let's look at the charts first. Now, whatever they're going to do from a fundamental standpoint, the technicals will give us the information about that first. So we want to be prepared first for that information before we do anything. So let's look at this order book inefficiency here. Keep your eyes on this. Market structure break is here. Here's the B swing. So now that we have a full range of A to B with a market structure break, this is the parent swing. This right here, this whole trend from here to here, this is our parent swing, guys. And so from here, if I put this right here, parent swing, this is what we're looking at, okay? This parent swing, guys, is what we're going to be looking for to be able to make our suggestions of price action movement moving forward, okay? So parent swing is right here. This is what we need to see, all right? The price isn't in a range of accumulation here, which means that liquidity is going to be redistributed, most likely to the upside. And if I go here, we have some redistribution here. So I'm going to put this here, accumulation for our phase of price action. All right. So there is a very strong breakout about to happen, most likely to the upside. All right. So I'm going to put potential upside here. Okay. I'm going to put this right here. And let's see what happens with this. So USD CAD is top of my list. The next list, top of my list, guys, that I'm going to be watching out for is right here with gold. So I'm going to give you guys this beauty right here that I'm expecting to see on the price action. And this is it really. So USD CAD, okay, and gold are my favorite two pairs at the moment. Now, we have a pool of liquidity that the price has set up right here at 1809. And I expect the price to come back to that point at the moment. Now, at the moment where we are with price action, there is a big inefficiency of an order block on the H1, which is here. So on the H1 here, there's some price action that we've seen that I don't personally feel like is completely, well, to a certain degree is completed. I've seen how the price has reacted at these lows here. So we actually are okay. The price did come back here. I haven't looked at gold for long enough, but we have come back here. The next H1 order block I'm looking for order flow direction. Now, the order flow direction at the moment is towards the long side. So we're looking across here. We have a flow of order direction across here. This is where we are. And as you can see, the price has come back to this area here and also taken this low. So to me, it looks as though gold is showing signs of a long again. And because we have this pool of liquidity at 1809, I'm expecting at least a 300 pip move right here. We have major opportunity here. Now, for us to get this trade, and if this happens, I expect the price to even get above these highs right here and make its way towards my first target, which will be 1826. So from where we are at the moment, we potentially have at least a 280 pip run, 333, 440, 444, 54.6. So we have this range here. Let's look at the 15-minute. All right, so the market structure at the moment hasn't been broken. All right, if we look at the swings right here, the major swings we have, so we have an A swing, we have C, B, and here's C. And let's check the length just to make sure. So from here to here, A to B, we have a length of 86.8. And from here to here, let's see, from this swing point right here. All right, so we do have a ABCD structure here. So in terms of what we're looking at for a market structure break, because we've had, let me take this off, delete this. If we go from where we are right now, okay, this area right here could potentially produce a reversal signature, okay? As soon as we get this reversal signature afterwards, I'll make sure that we can see, we can go for, we could probably get a very good movement happening. So I'm watching here. Here is A. Here is B. Here is C. And here is D. So A, B, C, and D, this is the market structure we have now. The only issue is that the D formation here happened after the price took this low. So in terms of market structure, what high or what swing are we looking for? Now, in order for this to clarify any sort of structure here, I mean, we could call this A and B, but even if, and this is important, guys, even if we have a body close, okay, break of market structure here, it won't be enough. We need a break of market structure right here. All right, so I'm going to write this over here. We need a BOS from here. So BOS, yeah. BOS right here. I'm going to put B right here. I'm going to delete this. And then after market structure goes over here, let's go to A. So if this is our new A swing formation, even though we have a new swing, of course, the price could continue bearish. It has formed another swing right here. So that could be C, and then we could be going short. However, if this is going to go long and fill out these liquidity pools, now there's a whole section of them. There's a large range of pools of liquidity out here, which means there's a lot of stop losses right at this region here. Now, there's not enough time to go through the explanation, but if you want to take my word on it, trust me, the price is going to go there. Now, gold is looking like one of the best opportunities, along with what we have with USD CAD. We're looking at about 600 pips of an opportunity right now. So right here, we need a break of market structure and then a return to the order block nearby. At the moment, what I'm seeing here from the 15-minute structure is that although this whole area is demand, we have two ranges of demand on the lower time frames for accurate entry. First is here. Now, this supply zone is the trigger for us to see the price take this low from the 19th. And then we see the price break above very strongly. We've had the price try to return here, and then we've seen the price return here, and the body has closed inside of this area. So this exact pinpoint right here can be the area where we can have strong bullish liquidity for the price to go long. It's not a coincidence that the body of the candle closed in here and is going long. Now, if the price wants to be cheeky or is going to take off even tomorrow, possibly, there is a lower down area of demand which the price hasn't reached into. And if it wanted to, it can easily drop a little bit lower and then go long. But in terms of the order flow direction, the price is right on course for us to be looking for a long major opportunity, guys. All right. So be looking out for an entry on this, and I'll come back with an update. All right. If we get a structure exactly like this and the price breaks market structure and comes back, buy here, stop loss beneath. You're looking at 20 pips stop loss for at least the first target, which is above these highs, 20 pip stop loss for 277.6 pips. That is a risk to reward. Now let's do the calculation here. If I get the calculator out, all right, let's do the calculation. We're looking at, let's see, 277 divided by 20. So we're looking at 1 to 13.85 risk to reward. So if you risk 1%, you're going to make 13.85%. If you risk 2%, then we're looking at 27.7% gain. And this could be a simple day trade that you can take. Now, if the price gets to the extreme target first, or my first extreme target, not the only, then we're looking at a larger target of about 450 pips from entry. All right, so let's do a calculation there. So 449, let's just put 450. 450 divided by 20, easy maths here, 22.5. So if we risk 2%, what we're looking at, 45% gain. So almost 50% of your account gain for that target. And there are even further targets than this. But for me, gold is a great opportunity that we should go for. Now, how can Jackson Hole help? Now, if Jackson Hole, in other words, if the tone is bearish, now I'm going to bring up this now. Let's share the screen. Let's have a look at what's going on here. All right. Let's have a look and see what we have here. So I'm going to show you what it looks like. Let's put this here. I'm going to share the screen. Just give me a second, guys. Let me switch over and let me show you what Jackson Hole is about. All right. So let me quickly switch over here and show you guys. So I'm on Google Chrome at the moment. Let's have a look and see what's going on. So when it comes to Jackson Hole Synopsum is a very different type of a situation. What we have going on with Jackson Hole is a situation of where the price is, how can I put this? The price will definitely be moving when it comes to the US dollar, but it will be in relation to what is said. Now, the Federal Reserve are holding we're holding the Synopsum between the 26th to the 28th of August. So this is running for 3 days, guys. Okay, it started on the 26th, which is today, tomorrow, 27th, and also on Saturday, there will also be discussions. Now, in these 3-day discussions, there are different authors who write about things. And this year, the topic is macroeconomic policy in an uneven economy. Okay, now this is an important point here because the macroeconomics that they're discussing are going to be things like interest rates, unemployment rates, and things of that nature, and also how they're going to tackle these issues. Okay, now I'm going to put this here. Forget New York Times because they're not showing that, and we don't want to sign up to that right now. I want to focus on here. So this is what it looks like here. So here, when it comes to what we have in the Synopsum topics, we asked experts to write papers on subtopics to date. More than 150 authors have presented papers on topics such as inflation, labor markets, and international trade. Okay, papers provided to the bank in advance and presented at the annual economic policy Synopsum will be posted online at the time that they're presented at the event. Here we go. So first of all, I want you to understand that Jackson Hole is time sensitive and is based now. The reaction on the market is not going to be immediate. Okay, and the reason why it won't be immediate is because it's going to take time for investors and higher levels of money in the market and deep-pocketed individuals that are participating across the Forex market and other markets which affect Forex, okay, before that there is any sort of reaction. So I'm expecting today for there to be some movement because of the anticipation, but really into Friday and even possibly over the weekend and then onto Sunday's open for those of us in the UK, that's 10 p.m. GMT. When the market opens, we should be really seeing some activity on the dollar. Okay, now the Federal Reserve, the debate right now and what you need to be watching out for is, are they actually going to talk about their tapering? Okay, now if I go up to, if you're not too sure what the US dollar tapering is, in essence, tapering is when a central bank decides to decrease the amount of currency in circulation, okay, for different reasons, okay, because more money in an economy brings inflation. Now, depending on the financial situation and structure of the country at the time or economic condition, printing money, not that it is a good thing, I believe it's a bad thing no matter what, okay, but that's another topic. But in the situation of a debt economy that we have, all right, when asset prices are falling, you know, governments are running out of money and running into deficit, printing money is a short-term solution to solve the problem, okay, because it balances the deflationary side of prices dropping, okay, assets dropping, things that we saw in 2020 because of financial crash, and printing money helps to stabilize that system. Okay, now, as long as a country is, if the country has debt, okay, and the debt burden is high, okay, printing money can help in the short to mid-term to be able to balance that. But the prerequisite is that the amount of debt, okay, or the debt burden percentage has to be lower than the income earning. So for that to happen, more money has to be put in, productivity needs to go up higher, GDP needs to increase, and etc. All right, so we're not doing an economics lesson right now, but this is where we are. So far, already with the US dollar, we're seeing that we've had a negative result for the GDP. However, the price is still pushing long. Now, the Jackson Hole Synopsum is happening right now. So I can say that for the next, until the US session ends and possibly even after that, the price is going to be choppy. And this is why I would say when it comes to opportunity, guys, it's going to be very interesting to see what happens. Okay. Now, the Federal Reserve Bank in Kansas City is the one who's holding this, by the way. And so the Fed are definitely going to be hosting and saying certain things. Now, if you want to listen into this, I think there is a way you can. If not, we're going to have to wait for the papers to be released. But whoever is talking as they speak, then their papers will be released after they speak. All right. So let's come back to the markets and look at other US dollar pairs and see exactly what's going on. All right. So we have major opportunity, guys. If you just took these two, you'd be good to go. Now, for those of you on the live, keep your eyes peeled and be ready. All right. I'm going to end off here quickly for you guys. Let's look at the dollar index and see what's going on. And then students, you stay on afterwards so we can delve a little bit deeper and see what's going on here. Now, what we have at the moment, I did speak about this before it happened, but we had the signature reversal. Now, the dollar index is actually the most liquid asset on anybody's forex chart. Is about $4 quadrillion deep in terms of money. Okay, because it's a basket of all of the major currencies that we know: the yen, the pound, okay, and other currencies, Swedish krona. Okay, so it's weighted, and the euro also. So is weighted, the dollar index is weighted on that. So there's a lot of money within the dollar index. So supply and demand still works, and the effects of supply and demand can still be seen. So we have a major weekly demand zone that I've talked about extensively, where we had a signature of reversal. Now, if you're not too sure how the dollar index works, I'll give you a quick 30-second briefing about how it works. Now, how this works is every time the price goes upwards or the dollar index price goes up, it means that the dollar strength has gone up also. If you see the index go down, then it means that the dollar is becoming weaker. In other words, the dollar is weighted against a basket of 5 currencies. And when it costs more to get the dollar, in other words, then that means that the dollar is gaining strength, usually against other currencies. So that means if the dollar goes up, something like USD CHF would be going up too, and vice versa, Euro USD and currencies that are US dollar currencies, which are not base versus the quote, where the dollar is not the base, would be going the opposite way. So Euro USD, AUD USD, things of that nature. All right. So that's a quick demonstration. Now, if you want to prove this, if I go to the weekly structure of USD CHF, can you see that is very similar in nature, even down to the reversal signature to what it looks like, very similar in the pattern. So we've had this first bullish here, break of market structure at this point right here. And you can see the price has returned and started to make a long. If we look at the dollar index, we've had the same thing, break of market structure, return, and now it's going long. Okay, so this is important for you to notice when you're looking at this. If I pull up Euro USD, let's see if I got Euro USD here. Do I have it? No, I'm going to have to steal USD CAD from here. If I go to Euro USD here, let's look at Euro USD. You can see we have the opposite reversal signature. We have a break of market structure, return, and then the other way. So it's completely opposite. So we have inverse correlation here. So when I repeat, when the dollar index is going upwards or going long, Euro USD will be going short, and USD CHF and USD Japanese yen to extent will be going long. Okay, so let's have a look here quickly at the dollar index and see where we are. Now, at the moment, we've had a very good break of structure here. There's one thing I see, the supply zone that was created here held the price down for long enough, and then we've had a break above, but we're missing a return here. There's no return back into this order block. So there is an opportunity. We're in a major area of supply right now. And really, this is a very important one, because once the price breaks past here, there isn't much to the left for a little while until we get towards the 97 mark. That will stop the price from pushing further upwards. So I'm expecting to see a return here, which gives me the sign that the dollar is going to experience some weakness. And I believe that if this is the case, then most likely it's either the Federal Reserve will not talk about the tapering, change their mind and stop doing it, or not do it anymore. There's a few options. Any of those things could cause a very strong bearish sentiment for the meantime. But again, we've broken past a major area of supply. We just don't have the return. So even looking at this market structure, if I go to the daily and then down into the H4 here, all right, we can see that there is a demand zone capped right here on the H4. And we actually even haven't had the return. This H4 candle right here, any of these two should have created a return to the demand zone to go for a long. And so we see that from this strong bullish run here, the market has changed from a very strong topology to a more bent towards a range. And even though it's increased with higher highs, but we can see weakness across here. This pool of liquidity that has been left behind by the market, I'm expecting the price to pull back here and possibly even pull back lower. So the body of the candle might stay within here, but I'm expecting some wickage down to around about here. So this is my projections for what I'm looking for the price anyway. Where are we right now? So on the H4 at the moment, the last major order block we had was this spike here, which the price used to gap up, and we've just broken beneath and returned. So right now, the demand side of this market has become supply. So we should be looking for a short very soon. This is why I'm looking for USD CHF short. And it doesn't mean that USD CAD is going to go short. We're going to have to use other commodities to be able to work that out to help us. Now, I think we're about to have a short. I see a pool of liquidity unkept, and we've just had the last flip right here down to the H1. So I'm looking for a short even now. Yeah, I'm looking for a short even now, guys, even down to the 15-minute. We might get one more small pullback to around about here, but then I think we should be going short right now. So get yourself ready, guys. Gear up. I hope you guys enjoyed that on the live. Students, continue with us, stay on, and I'll catch you guys on the Zoom on the live